Hey everyone, I am back with another dividend stock investing video. Today's video is very special. Believe it or not, I actually sold 3 dividend stocks this week. I'm pruning back the portfolio. I sold the bottom 3 stocks of my entire portfolio that just don't make sense to hold anymore. And the reason I sold those 3 stocks is to raise a little bit more money because I have a big announcement. My wife and we bought a new home outside of the state of California, and so I want to discuss a lot about the new strategy in the video today, how the strategy is evolving just a little bit, but more or less my thug life investing strategy remains the same. I want to cover the 3 stocks that I sold in the video today. I want to cover a dividend increase from none other than ALTRIA, Thug Life Investing, and I want to cover my strategy and how it's evolving. So get ready, everyone, for a really exciting dividend stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So as we move out of the Bay Area here to a new state, we're unsure yet if we're going to sell the old house or rent it out. We have to figure that out. But nonetheless, regardless of what we do, getting from point A to point B, it's going to require some cash. It's going to require some cash. And that's one of the main reasons that my focus right now is all about cash. And you'll see that throughout the video today. And one of the first steps in raising some cash to move our family is basically selling 3 stocks, the 3 stocks that I wanted to prune out of the portfolio. But I do have some other stocks, some other laggards, if you will, that I may go ahead and sell as well. So check it out on the screen right now. And what you see on the screen is a complete list of all 7 stocks. I would say the bottom 7 stocks in my portfolio that I could possibly consider selling. And I have them in order of worst to best, more or less. And the ones that have the red above them, numbers 1, 2, and 3, have already been sold. And so I sold Cedar Fair this week at $44.50. I sold PPL Corporation this week at $29.18. I sold Wells Fargo this week at $48.03. Why did I go ahead and sell Cedar Fair, ticker FUN? This I just want to go through really quickly. I'm a real estate development professional, and so in addition to just home ownership and owning real estate through homes, I own Realty Income, which is a REIT, and also through my job, I have the opportunity to invest in commercial real estate. In fact, I just started a new project this week. I'll share that on the screen right now. And so I am very real estate centric, very real estate focused. And so for me, when it comes time to prune the portfolio, I have to look holistically. For Cedar Fair, it just doesn't make sense in the portfolio anymore, in a real estate centric portfolio, given the business line they're in, that they operate amusement parks. They had to suspend the distribution. They have racked up some debt during the pandemic. I just don't believe that this company is very well situated for the future, as they were previously before the pandemic. This is a company that got hit really hard by the pandemic. Now, I would say for long-term buy and hold investors, I still love this company. And what I would say, again, these are the bottom tier stocks in my portfolio, but overall, I believe all the stocks in the portfolio are really great. So I'm not trying to put down Cedar Fair too much, but I am trying to say it's in the bottom tier of my portfolio, and that's why I sold it. I'm skeptical about the future for this company with the pandemic and coming out of the pandemic. And quite frankly, I need cash flow now, and they suspended the dividend. So that's why I sold Cedar Fair. Moving on to PPL Corporation, as you can see on the screen right now, check it out. They do have a really solid dividend, unlike Cedar Fair, which had suspended it. It's 5.69%. The reason, however, that I'm concerned about PPL and that I sold PPL is the payout ratio right now is over 100%. It's at 136%. And quite frankly, with the UK, there's a lot of talk about nationalizing the electric grid, and with all of that talk, PPL Corporation actually went ahead and sold their electric utility in the UK. Again, this is something that materialized and developed after I bought the stock. Their business fundamentally changed, kind of like Cedar Fair's did, where with all these talks of nationalization, they lost their business in the UK, which was one of my favorite parts of owning the company. Now, they did pick up a small utility in Rhode Island to compensate for it, but I could see management making the case to cut the dividend. Now, I hope they don't, because they got a lot of money for selling their UK business, but it is possible that they cut the dividend. And so what I took out of all of this is that I have other electric utilities in the portfolio. I've got Southern, I've got Duke, I've got Hawaiian Electric. I like all of those better than PPL. And because PPL's business fundamentally changed, that's why I sold it. And so something to keep in mind as I go through the video today, a lot of you ask me, Ian, when do you sell stocks, if ever? More or less, I'm a buy and hold forever investor. And so what I'm trying to illustrate here is, in the rare case when I do sell stocks, for example, needing cash for moving into a new home, for down payment, so on and so forth, I will prune the portfolio, but quite frankly, I'm pruning stocks that I probably should have pruned otherwise. And in the future, when I'm buying a lot of stocks again and going in heavy again, I probably won't buy these back. I'd rather just focus on my core stocks. And I'm selling stocks that really fundamentally changed here. And it was almost impossible to forecast these changes just because our world has changed so much in the last few years from a just political standpoint, with nationalization, and also just with this pandemic. And so I want to move on to the third stock that I sold. Check it out on the screen right now. And so the next one that I sold is Wells Fargo. The reason I sold this stock, quite frankly, is it rebounded from the lows. I was able to sell at a profit, and I just don't have a ton of faith in this bank. They have been making a lot of changes in recent years, even since I purchased the company. And what I kind of realized, especially as I've been getting more into cryptocurrency and crypto, I believe crypto is the future of personal finance. I have other banks in the portfolio. And so for me, I just don't need Wells Fargo because I have other banks like Bank of Montreal, like Bank of Hawaii, for example, and I have cryptocurrency. And so I was thinking, well, for me, Wells Fargo, it's just not strong enough of a bank really to need right now. And because they went ahead and they cut the dividend, I'm sure they will continue to bring it back, but it's only at a 1.67% yield. And so I don't have a lot of faith in the company having cut the dividend during the pandemic. And so those are the three, quite frankly, for me. And you can see there's kind of a series of reasons that I sold them. Pandemic changed things, fundamentals changed, and they're just in the bottom tier of my portfolio, so it made sense to prune these and raise cash. Now, if I do need additional cash as we move forward and we go ahead and purchase and close on the new home, what's going to happen is I have a short list of other stocks that I may sell. Now, one thing I want to keep in mind today in the video is please keep in mind that what I'm selling here are very small positions in the portfolio. These are ancillary positions. Some of them are minuscule in size as compared to some of my really large core positions. And so you don't want to take home from the video, Ian is getting out of dividend stocks or Ian is running from dividend stocks. Quite the contrary, I want to refocus after all of this on my core stocks and on my sin stocks, quite frankly, as well. And I'll get more into that in a minute. But I am trimming here, and I'm trimming ancillary positions that ought to be trimmed, in my humble opinion. But if I do need to raise more cash, here's what I'm doing. Check it out on the screen right now. And I have a few that are on the short list: BP, Royal Dutch Shell, Danone, and IBM. And so BP and Royal Dutch Shell, honestly, I'm going to try to probably hold on to these because oil is rebounding and they're trading at really low PEs. Why I don't like them, though, energy is not a huge strategic priority of mine for the future. I prefer to hold my Chevron shares, which I think are stronger than BP and Royal Dutch Shell. But that being said, both of these have a reasonable dividend yield. The dividends have been coming back as they've been exiting the pandemic here with a lot of success and with high oil prices, and the PEs are low. So again, I'm probably going to try to hold on to those. Danone is another one I really want to hold on to, quite frankly, because it's just one of the only pure play international companies I have. It's a French company. I don't think management cares too much about the dividend, but I love their focus on CPG. I am a CPG, consumer packaged goods, food. This is a consumer packaged goods food company, but I'm a CPG focused investor. I really like the company, and I'll try to hold on to that one. IBM is last on the list. It's just been the turnaround play that never seems to make the turnaround. But I would say other than Danone at a PE of, say, 20, and that's trailing 12 months, I believe, because I couldn't get forward on it. But IBM and Shell and BP, they're all trading at pretty low PEs, whereas the stocks I sold, quite frankly, Cedar Fair has no PE now. PE is not even the best way to look at that company because it's a master limited partnership. One ought to be looking more at a funds from operation style analysis, but nonetheless, Cedar Fair is not doing very well because of the pandemic. PPL has a very high PE. Wells Fargo, I guess it has a reasonable PE, but I'm just tired of Wells Fargo. It's not the strongest bank in the world, and it seems like it has deteriorated throughout the course of the pandemic even worse. And so that's where I'm at right now. Let me know in the comments below what you think about the stocks that I sold and the stocks I'm going to consider selling, but I'm probably going to try to hold on to. I'd love to know your thoughts. And by the way, if you're on my Patreon, thank you for hanging in there so long, because this is some review material. I have already shared a lot of this on Patreon. By the way, I have like 44 bonus videos on Patreon. I'll include a link in the pinned comment below. Make sure to check that out if you'd like to sign up. I already have a ton of patrons over there. I keep putting my best possible content on Patreon and on YouTube here. And by supporting me through Patreon, it means the world. It really helps what I'm doing here on YouTube. It helps with my life. It helps with everything. It means the world to me. It's one of the best ways you can thank me. And quite frankly, it is so hot right now in this garage, so I'm sweating it out in the garage again. And thank you to all the patrons who are, and all of you who are supporting me through these hot months here in the garage. Anyway, if you enjoyed the video so far, please go ahead and smash the like button. It means the world to me. And another way you can support the channel, and please don't forget to subscribe with the notification bell. So now that you know the stocks that I've sold, that I'm considering selling, I want to elaborate on that. One of the other ways I'm actually raising funds for this big life event that we're so excited about is I have been paring off ancillary crypto positions as well, ones that aren't as meaningful to my overall cryptocurrency portfolio. And I will share that on my crypto channel in a forthcoming video. So check out the pinned comment. Make sure to subscribe and check out my crypto channel as well. I'll share those details over there. Now, what I want to do next is I want to get into some good news as it pertains to ALTRIA. Then I want to get into my complete strategy and how it evolves from here. So check it out on the screen right now. And what you see is ALTRIA. I want to share ALTRIA because it's a Thug Life SIN stock. I think more Thug Life investing could be ahead for me. First and foremost, I just want to share right now, the starting dividend yield is 7.3%. The PE ratio forward is a 10. And payout ratio is just under 80%, which is their target. So it's at 78. There's going to be more room for this company over time to continue to increase the dividend. This is a company that is quintessential value, growth, and high yield. It's one of those companies that it's just so hard to get a combination of all of those above factors. It's one of those rare cases. And what I would say is I was discussing with my friend today. I had a Zoom call with my friend Greg today. He's the Dividend Monster on Instagram. Check out the pinned comment below. I'll link to his Instagram. This is one of my favorite dividend investors, and I don't want to give away too much, but I'm going to be interviewing him, guest interview here on my YouTube channel really shortly. He has an amazing story to tell. Amazing. But when we were on Zoom earlier today just chatting, one of the things that Greg mentioned to me is he thinks that these SIN stocks, they're kind of perpetually undervalued because so many people just don't invest in them for philosophical reasons. And that's why they're always trading at these bargain PEs. And he reminded me of this, and I love this point. And so just for me looking forward, something like this may play more of a role in what I'm doing because definitely if we retain this property we're in now, money will be a little tighter and I will need more cash flow. And the quickest way to get more cash flow is companies like ALTRIA. And anyway, that's that. But what I want to share, check it out on the screen right now, is something really special. I bought my first tranche of ALTRIA, I think it was back in about 2009. I bought it at $15.99. Well, now the stock is trading at $49.53, and after all those years, there's been a lot of dividend increases, not even counting reinvested dividends. My yield on cost on the first tranche of ALTRIA that I bought is now 22.5%. So every single year, on my first tranche, I'm yielding 22.5% on that tranche in dividend income, and it keeps going up over time because they keep increasing the dividend. The way I arrive at 22.5% is I take the current dividend, which is $3.60 a year, and I divide it by $15.99. And so that's just really fabulous, really exciting to see. It's the miracle of dividend growth investing right before your eyes. What I also want to share is they just increased the dividend from 86 cents to 90 cents per quarter, and so that's an increase of 4.7%. And so I have been thinking more about ALTRIA after the call with Greg today, and also just given my circumstances in life where I'm kind of getting older, we're making a big move, I need more cash flow. More cash flow is good because I'm using the cash flow literally right now, and ALTRIA really comes top of mind. And so with that, I want to get into the new strategy. One of the things with my new or adjusted strategy is rather than reinvesting all of my dividends right now, I am actually turning off reinvestment for most of my stocks other than the core stocks, the really core stocks. And so I want to share that on the screen by example. Check it out right now. What you see on the screen are some tickers of selected stocks, a few examples of dividends I just received in cash. A lot of these were reinvesting before, but now I am just taking the dividends in cash because I need to stockpile cash now because of this big life event. And so the stocks just recently that paid cash dividends that I'm just taking in cash, some examples are AbbVie, Air Products and Chemicals, Bank of Montreal, BTI, Caterpillar, Colgate-Palmolive, Hasbro, Hormel, Norfolk Southern, and Starbucks. And now one example of a dividend I just reinvested is Apple. I'm not taking that one as cash because I've earmarked that as a strategic stock that I want to build bigger in my portfolio. I want to keep reinvesting there. And you might say, well, Ian, isn't Starbucks a strategic stock for you? It is, but it is very richly valued here. And so that's why I'm now taking Starbucks dividends as cash. And so one of the things I just want to highlight out of all this is the beauty of dividend stock investing is it's the perfect strategy, the perfect investing strategy for a big life event like this. I have a big life event. I need cash. I need a lot of cash. It's expensive, down payment, moving, furniture, all kinds of stuff, a lot of stuff. It's going to be very expensive. And so I can just turn it off, the dividend reinvestment, and start compiling more cash really quickly. Quite frankly, even after the move, especially if we retain the residence here, and even if we retain it rented out, finances will be somewhat tight. And so what that means is I will probably continue to take dividends as cash for a while as those cash reserves and cash buffer just keeps getting built up. And so that's the miracle of dividend investing, though, is it gives us all flexibility. You may have very different life goals than I do. You may not want to move, or you may want to do something completely different. The point here, the purpose here, is the dividends allow you to live life on your terms and give you options in life because you can turn off that reinvestment and start tapping into harvesting the cash flow. And so that's the first big change in the strategy that I want to share. The next, and it's not that big, I guess, more or less, I'm still buy and hold forever. I've trimmed a few positions. I may trim a few more, but these are low performers anyways. And I'm taking most of my dividends, or a lot of my dividends now, as cash. The next thing I want to share, as you can see on the screen right now, is a summary just of what I'm doing, strategic priorities for me at this time. My priorities are a lot of different. I entered this year, 2021, focusing on growth positions, focusing on stocks like Hormel that are growing the dividend quickly and trying to build positions in those to size. Well, a lot has changed in less than 1 year. Our whole life is about to change, and so it's embarking on a new adventure. It's very exciting for all of us. And so with changes in life, changes have to happen on the financial side to make it work. The first change is just having sufficient cash to cross the bridge. I talked about this on my Patreon, so I don't want to reiterate it too much, but the idea is there's a bridge here, where we are now, where we're going, old home, new home, and we have to cross the bridge. And when we're crossing the bridge, it's going to require some increased focus. I'm pretty tired doing the video today. I would say this week I've worked harder probably than I have in a long time because there's been a lot of work at my real job, work also though on figuring out this whole home buying process and all the documentation, review, all of that kind of stuff. It's been a lot of work. And so anyway, with all of that, things are changing a bit, and so I want to have more cash. Cash is going to be a priority right now, and as you can see on the screen right now, the next thing that I want to share is just cash reserves. In addition just to having cash to make it from point A to point B and go through this kind of transformation of our life, we also need sufficient cash reserves just to sleep well at night. If we rent out our existing residence, well, what if there are repairs or things that need to happen? You need reserves for that. In the having two residences will definitely require more reserves. And I think during any big life event, whether it's what we're doing or anything else, cash reserves, sleep well at night is always a good thing when you're going and crossing a bridge. And so I have 3 strategies for cash reserves. The first is just good old cash that earns next to 0%. The next one is XYLD, which is yielding about 9%. It's a covered call ETF. I'll link in the description below, in the pinned comment below, to a video I just did on this. I plan to buy more XYLD actually this week. Some of the cash that was harvested from selling those 3 dividend stocks, I plan to put some of it into XYLD. Now, the next strategy as part of cash management, cash reserves, is stable coins. I plan to continue to buy stable coins on Voyager and BlockFi. I'll link in the pinned comment below to some videos on my crypto channel if you want to check those out, but I'm yielding 9.5% on Voyager. I'm yielding about 9.5% on BlockFi on stable coins. And so that's part of it as well. Now, what else is part of my priorities at this time is just high yield and value. I have 3 stocks I've earmarked here. One I've already discussed, Altria. The next one is BTI. The next one is Campbell's Soup. Those are probably the 3 right now. And by the way, one of my friends on Twitter, shout out, pointed out Campbell's Soup to me. He was like, Ian, big dog, what do you think about Campbell's Soup? And honestly, I wasn't looking at it really closely, but then I realized, wow, the stock is going down, yield is going up. Probably not a bad time to buy some more Campbell's Soup. So thank you, my friend, for that. I rely on the community sometimes, or a lot of the times, for this kind of input. It keeps me sharp as an investor. I own a lot of stocks, and so it's hard to keep track of everything, especially when my whole world is spinning really quickly right now with so much going on in my life. So thank you to everyone in the community for your support. It does mean the world, and for all of these insights, it really means a lot. I get so many insights as well through my private Facebook group, which I'll link to in the pinned comment below as well if you want to join. But anyway, I'm looking at high yield stocks. I'm looking at high yield stocks because I need cash flow. And going through what we're going through now, there's a lot of expenses. It's expensive. So cash flow, high yield right now, current cash flow is good. What else? Check it out on the screen. The next one is just, I will reserve the right to invest in select special opportunities, money permitting. One of those is just buying more Hershey stock for my kids. I've already earmarked some money from actually those stock sales that I just mentioned that I want to use to buy Hershey stock for my kids for Christmas. I can't miss on that. And if there are any other special opportunities that come up, I definitely want to keep all of those in mind. And so overall, the next year or so, it may be a little bit more boring of a strategy for me. It's pruning the portfolio. It's stockpiling cash. It's working really hard to earn more cash. It's putting cash in cash-like equivalents like XYLD and stable coins to try to earn some interest on that. And it's when I have a little extra buying the high yielders out there like ALTRIA and perhaps a few special opportunities when they come up. So it's going to be boring on that front, but it's exciting on the front that I'm retaining most of my dividend stock portfolio and we are going to get as a family into such a better position. And so we're really excited about it. And, once the move is further along, once all of this process is further along, I will share more details with all of you because I hope to meet a whole new group of friends in the new state that we're moving to. And so we're so excited. But before we leave here, I've got a lot of time still here in the SF Bay area. So I plan to have some more meetups here as well and to hang out with all of my friends here as well. Hey everyone, thank you for hanging in with the video today. I know it's a little bit more jumbled than normal, and that's because I'm having a hard time thinking with the heat in this garage. And again, it's been a really long week. If you enjoyed the video today, please go ahead and smash that like button. It means the world to me. Please also go ahead and subscribe. Before I leave today, in terms of a full disclosure, I am an affiliate of BlockFi and also Voyager. In terms of a disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose a ton of money in the stock market or, for that matter, with any kind of financial transaction. In terms of a full disclosure, I listed a ton of stocks today and I own them all, so I'm going to try to make it through this. We'll see. In terms of full disclosure, my kids are long Disney. They are DIS. I didn't even mention that one. They're also long Hershey, HSY. And so also, I am long Altria, ticker MO, BTI, ticker BTI, Campbell's Soup, ticker CPB. I am long XYLD. I am long stablecoins, Gemini, US dollar coin, GUSD. I'm long US dollar coin, USDC. Also, in terms of full disclosure, I am long BP, ticker BP. I am long Royal Dutch Shell, RDS-A. I am long Chevron, CVX. I am long Danone, DANOY. I am long IBM, ticker IBM. I am also long Bank of Montreal, BMO, Bank of Hawaii, BOH, Hawaiian Electric, HE, Duke Energy, DUK, Southern, SO, and Realty Income, ticker O. I own all of those in my personal dividend stock portfolio. Actually, there's a whole nother list that I need to go through at this point. In terms of full disclosure, I'm long Apple, ticker AAPL. I am long Starbucks, ticker SBUX. I am long Norfolk Southern, NSC, Hormel, HRL, Hasbro, HAS, Colgate, ticker CL. I am long Caterpillar, ticker CAT. I am long Air Products and Chemicals, APD, and AbbVie, ticker ABBV. Whoa, that's a lot of stocks. I am long all of those. All right, everyone, I'm going to see you all in the comments below. Please share the video with your friends if you think this would benefit them as well. I love you all, and I hope you all have a wonderful day.